Okay, we're now looking forward to this last session. I'm sorry you've got so much of me today. If Don Dwyer from Guardian Jet, Alan Walsh from Sentient, and Roly Vincent from JetNet IQ would like to come up, we're going to look back, we're going to look beyond 2024, partly by looking back. Welcome. So, let's start. Well, Alan, let's start with you. How is business?
It is busy. It's been a really, really interesting 2024 so far. I think what we have seen with it across not just the flagship, but the Sentient brands as well, you come out of the start of the year, there's a seasonality associated with it, but spring was extended. It was extended. It was just a really, really busy time. Summer was really, really busy time. And we look into fall and forecast between now and the end of the year. It's a really, really busy time. There's been a lot of occasions where we look at it and go, that was the busiest day ever. So I look forward to making sure that we continue to say that.
Okay, so on the card side, very busy. Roly, on the new aircraft delivery side, or demand for new aircraft and deliveries.
Demand is staying strong. Book-to-bills are coming in around 1 to 1.2 now for the big five OEMs. We just finished our Q3 report on that. So big five backlogs at 51 billion US, which is a really nice number. That's a couple of years of work. So other things going on, but we're very confident about the year end. We think it's going to be around 770 as a number for this year's deliveries, which is down a little bit, mainly because of the strike in Wichita and a little bit of delay in the G700.
Don, demand now, how would you describe the market?
Yeah, I think the market's really healthy. I think corporate US came back pretty strong, looking for new aircraft. The used aircraft market, we saw inventories grow. They're now sliding down a little. It's been, I think there's an underlying optimism in the people that are actually buying and selling airplanes, not in everyone else, but in the people who are actually buying airplanes. There was an underlying optimism long before the outcome of the election. So we felt like it's our biggest year ever. We're happy as clams.
Roly, what's your view on the pre-owned market?
It's rebalancing is the word I use to describe the pre-owned market. We like where it's at. It's doing exactly what we expect as a market to do, meaning the people in the market are doing what we expect them to do. Values are holding up a little bit longer and maybe higher than I expected. And given some things that I'll talk about in a couple of minutes, we're expecting values to get quite strong again. We have an indicator in the market that since the election last week, we actually have metrics on that. So we'll talk about that in a minute.
Well, no, talk now.
Oh, you want to hear now? Okay, great. Yeah, here we are. Well, we have over 26,000 responses to our owner-operator surveys. We're very scientific, and we are very statistically sound in our processes. And I would say we just loaded our Q3 reports for our customers. Thank you. Many of you are in the room. Hope you enjoy those. But what we're seeing in Q4 already starts to change our thinking around where the sentiment of this market is. And since last Wednesday morning, we've had enough responses to our survey, which is in the field all the time, to say that the market has gone up 35 points in the last 6 days.
Wow, which is unprecedented.
That's on a scale of -100 to +100, and we actually have it for North America and the US as well. So it's about 35 points higher than it was 6 days ago. So what that tells me is that this young man's going to be busy, this young man's going to be busy. We love what we're doing, and our customers love what we're doing, so that's kind of fun. But wow, this market is tightening, and we just don't have the ability to serve it. I mean, we're trying to get our production rates up. We're trying to get our service and MRO shops, flow through better, but we have a supply problem.
Alan, do you think have you seen this? Because I see that in some ways your business is probably the fastest one, isn't it? Where people react quicker. Have you seen an upturn in demand in the last 6 days?
Yes. And it's funny, I was just talking with the team earlier on this morning, and just, how are things? I'm traveling, what's going on? And they're like, it is nuts. Now, some of it, there's a seasonality associated with it for sure. We're in that really, really busy period. But yeah, there's been a big uptick just in bookings in the past couple of days.
I find that amazing. Yeah. It really, and really, you've shocked me as well with your data. Don, has your phone been ringing off the hook?
So the easiest way to say it, without being political, because I don't want to do that, but I will tell you that on Wednesday morning, my wife was apoplectic. I'll just say that. And all day long, you know, it wasn't until around noon when I said, have you looked at your Merrill account? You know, and I think that was a little microcosm of what was happening around the world, is that people kind of took a step back and said, okay, well, here's what we have. And, you know, regardless of where you were at politically, it was nice that there was a decisive victory, and it's nice that the markets have responded well. All of us in this room live off those markets. And so, yeah, no, I think I won't tell you the phone was ringing off the hook because people buying new airplanes, but we did have a couple airplanes in play with the OEMs that I got calls that said, you better say yes today, or it's going somewhere else. You get those calls occasionally, but in both these cases, they actually did. We didn't move quick enough, and airplanes went to someone else. So, you know, that's a good indication.
The question that we've all been asking for years is, will new entrants stay? And I think if you bought a fractional, you're only renewing next year. If you bought one post-COVID, if you bought a new aircraft, Don, are you seeing any new aircraft from?
So I think it's a more complicated question than that, Alan. I think it's a great question. What we've seen, certainly every time there's a giant rise in any market, you're going to see the bottom end of that fall out. So the people that were trying to get the cheap, didn't charter before, and they went and tried to get the cheapest charter they could and bounced quotes off each other, they've gone. What we saw a lot of with COVID was also the rise of the management company and the fractional space that both got incredibly strong during this last 4 years. So if we saw some of the buyers come out of fractional because, it's no secret that service was stressed during the height of demand. And so somebody had 2 trips get affected in a month, and they said, I'm going to buy my own airplane. Well, now they buy their own airplane, and it goes down for a whole month of service. And it's a very different question. So, some of those people are transitioning back to fractional. I have no idea the veracity of this, but whatever the influx that came from COVID and the 12-year bull run that preceded it, I think a huge percentage are staying because wealth is good right now.
And Alan, you track it. You've got in the new aircraft market, we have hundreds of data points. You have thousands. Yep. Have you seen majority of new entrants stay?
We have. I agree actually with what Don had said. I think there is that element of the people that there has been a bleed off, right? First of all, for the reasons that Don just mentioned. I think people came in and somewhat overextended, or certainly didn't realize the cost, or just said, hey, I just don't need the service anymore. But for those that have stayed, like what we discovered with the pathway to success there with those and keeping them was through service. And, that was developed, I think, through, if I look at the FlexJet companies, through the distinction in the brands. Ken made that yesterday by having, a charter brand, a jet car brand, and a fraction brand to retain and grow that footprint. And we have retained it, and it's continuing to grow. So it's a positive story.
Roly, we've had lots of discussions about maintenance and aircraft being down. When you do your surveys and your thousands of data points, are you seeing dissatisfaction with manufacturers, or are you seeing people just sort of living with it?
Well, when we ask people where they would invest, this is the owner-operator community, if they could for a day be the boss and invest $500 million US into this industry for return, by the way, where would they put the money? And over a 3-year period in Q3 surveys, we've checked the same question, and MRO was #1 by far, and it keeps getting more number one, if you like. The results are going higher and higher. So a lot of requirement for MRO capacity. So a good area to invest. And obviously, you've got to work with the OEs to try to get authorizations to do the work. But there's certainly a lot of need for it.
I'm still shocked at how both of you have had like a 6-day. I'm really surprised by that. You know,
I'm not surprised. It's actually a nice turnaround. In North America, we've seen a lower and lower and lower sentiment for 7 or 8 quarters, and we've been tracking this. I think the market, I agree with Don, the political results last week, at least it's clear. I think that's what this country needs. What I hope is we don't waste the next 2 years with a year and a half of retribution. We get right to policy and get some good policies in place, but we have to be careful of inflation if we're going to get into a tariff war and transatlantic battles. I mean, this doesn't end well here. So,
Don, you've got OEMs looking at you straight in the eye. You used to be, well, both of you were OEMs. What would you be doing now? Would you be, if you were selling aircraft, would you be trying to increase production? Would you be arguing for them to increase?
So I think one of the things that I think the makeup of the customer is different. First of all, we spoke about the fractional and, large operators being more important. You're gonna see some huge fractional orders. They're becoming a really significant part of the production of the, call it 700-800 airplanes, whatever it is every year. Fractional are becoming a big, big piece of that. They always have been, but I think right now that's going to drive. I think that's healthy, and but yeah, no, I mean, I think everybody, and I've said this before publicly, that everybody that runs an airplane company now, and I do believe that our industry's in good hands, and I don't always say that. Every once in a while, you look around the airplane industry and go, really? But right now, I really think there's some really smart guys. They all lived through 2009. So while we all want to increase production, and supply chain is the governor on that, I think there's also this realization of let's not get too far out in front of our skis. I also think you've seen some signs this year that book-to-bills came down a little bit, that order books got a little softer. I'm sitting in front of Michael. I think that actually didn't happen to you. But, yeah, he's like, no, they didn't. But I think across, if I look across the industry, it got a little softer. Our buying was a little softer this year in new aircraft than in the last couple of years. So, but still very, very strong. So I wouldn't really be trying. If I was the dean of the aircraft industry and said, hey, this is what we're going to do as a group this year, I wouldn't be increasing production.
Yeah, and really, it does feel like it doesn't seem a massive appetite from anyone to. I always thought that it would take 1 or 2 OEMs would if one goes, it's very hard for some to stop, and it just doesn't seem to. It does seem very disciplined and controlled.
Yeah, right. Not so sure about that. I think if they could, they would. Some of them would. And that would lead to others saying that I have to as well. So nice to see. Actually, a couple of the OEs have put down some money and are going to be building a production capability here in Florida. So that's kind of neat to see. I think in our forecast, we have this industry growing this year and next, and then kind of going flat for the next 5 as a sort of a unit output and dollar output. That's where we're at right now.
Why?
Supply chain and labor is the 2 things that we're not fixing, by the way. They're just not fixing, by the way. So we'll get there, but the talent gaps that we have in this industry, I think Michael spoke about those eloquently recently, and I can't agree more. I mean, we're missing this, In this community, yeah, we feel pretty good about where we're at. We need to attract people into this industry to build our planes and fix them and fly them. So that's job 1.
Alan, you've had, unbelievable demand in the last, for jet cards in the last, and can you keep that up, or are you forecasting next year more flat?
I think if we look at the forecast, it's robust, right? And if I look at right now, whatever, mid-November, we're forecasting like over $100 million between now and the end of the year, right? So that flying has to be done. which is positive for us. That's a really, really good thing. As we get in through next year, I just say, yeah, it looks robust right now, and barring any, I think what they can call, I guess, an unforeseen decline, there's definitely cause for a lot of optimism there.
Well, he's pessimistic about next year, which is great from your budget.
Yeah, for sure, for sure.
Did you hear that yesterday? Ken's a bit nervous about 2025. He's just got I think he called it entrepreneur's paranoia.
Yeah. Healthy paranoia.
How they?
Well, I heard what Ken said, and I'd love to say I'm 50% the most confident guy in the room and 50% the most neurotic. I mean, I'm always waiting for the other shoe. So, yeah, you can. There's a lot of signs right now, though, that things aren't going to slow down, at least in the very short term. There's also a lot of things going on in this globe that throw out the deck of cards. So.
Yeah, black swans they're called. I mean, what are potential black swans? I mean, we could have some geopolitical crises here very short term. I mean, that'll change a lot of things quickly, even if we want to become a little bit more sort of isolationist maybe over the next few years. The world's a big place, and there's a lot of things going on out there. So we'll see what happens. I mean, it's a great place and time to be in business aviation. Pretty optimistic, actually. I'd say very optimistic for 25.
You know, one of the things, Al, that I look at for the health of our industry is what is selling. And you'll remember a number of years ago, we were doing the really high end. Everybody was, but the low end was just really kind of slow. And I remember somebody saying, well, why can't you just have the high end perform? And my answer was, well, it's when you have the French Revolution. So now we see it across every segment. Super mid-sizes, super popular. Light jets are absolutely off the charts. Pricing is staying strong. You know, you look at the high end of the business, and who'd have thunk, by the time the 10X gets out there, there might be 400, you know, 4-cabin zone airplanes. And the market wasn't supposed to be that big. So we just wouldn't have seen, I don't think anybody predicted the strength across every segment of the industry.
Okay, Alan, someone's asking, how many jet cards do you sell a month, roughly? You don't have to give us the exact numbers. And what's the average purchase price? I think we've got a customer.
Yeah, I think so too. The answer is I'm not telling you. No, I'm joking. There's a seasonality to that for sure. We're in the back end of the year, and that number is going to be really, really high, more so than the last couple of quarters. Average price also changes depending on, obviously, cabin type.
What's the lowest one, minimum price?
We're probably in the 270 range right now. But as I said, that fluctuates depending on the market and what we have right now.
And a lot of your customers, a lot of your customers, not a lot, but a lot of jet owners will also have a fractional and will also have a card.
Yeah, we do. I mean, what we have seen, around the entrance and, post-COVID is people, I'm going to say, moving around on different programs to have that service of what they have. We're lucky, again, being part of the FlexJet companies, where we have that ability to interchange and retain the base through fraction, charter, or card, and we do see that happen. Luckily, we've been able to, retain the loyalty and allow people interchange, but we do see people with multiple solutions that work for them.
Someone else is saying, could the fractional growth inhibit future demand for whole jets? Do you worry about that, Don? Or Rolly, you go?
I don't worry about that. I think it's an established business model. It works really well. People are getting to know it more and more and really enjoy it. I think after COVID, a lot of people came into fractional, and I think they're going to stay for a long time. It's a great solution. It gives them privacy as well, which is not something necessarily you always see in a corporate flight department, unfortunately. So there's all of that. We're very bullish on fractional. And managed companies and management airplanes as well. I think what's interesting is we're in a business cycle now, and if this demand signal that we're seeing is true, fractionals are used to buying at a sort of a point in the cycle where they have more authority over the pricing of that big order. I don't know that we're going to see that this time, right? I think that's a big change because the OEs are sitting on 2 years of work. And usually when fractionals do their big, when they go out shopping, they go to Costco for airplanes, then what they do is they buy at a point where it's, attractive to buy. I don't think we're at that point. I don't see us getting there anytime soon. Interesting challenge.
No, we don't see it impacting. And we think it's just every segment grown is good for all of us. It's just a rising tide. Plus, I love something else Ken said yesterday that, my competitors don't have to fail for me to prosper. And I really believe that. If you look at the top brokers in the world are in this room, you added us all up, it's not 50% of the market. It's a much smaller percentage than you think if you looked at some of the bigger players.
And
so we have room to grow.
Alan, you're not going to be negative about fractional companies, are you?
No. Not in any way, shape, or form.
Here's a really good question, and I'm sorry I can't get the questions back up. I'm struggling. Rowley, how concerned are you about future tariffs impacting the industry in 2025? And this is probably quite unfair on you, and I know you've also got Dean Roberts, who's one of the greatest analysts in the industry, has joined Rowley recently. And I'm sure Dean hasn't had time to look at tariffs, but it's very complicated, isn't it? When you think you've got an engine coming from Canada or avionics coming from, it's not an easy thing to look at, is it?
No, it's actually very complicated, and we have a lot of value add. Every aircraft that flies in the world has a lot of U.S. Value add, whether it's avionics, the engines, or something else. So there's always that. So you've got some non-American. In fact, of the big five, 3 of them are not based in the United States. So yeah, I mean, are we going to get into that? That hurts everybody. I think if we get into a tariff war, it's a tit for tat situation, right? And I just think of like Walmart. You go to Walmart, what do you see? You see food. Okay, that's mostly domestic. Everything else you see is made in China. Everything else is made in China. And if that starts going up in price, then Mr. and Ms. Main Street are going to feel it, and they're not going to be very happy. So we got to watch for inflation all throughout our economy. I think our industry can afford, quote unquote, the prices that are charged, but it's on Main Street. We really need to think this one through.
That one's beyond my pay grade, although you just, for things to change dramatically, you've got to get the House, the Senate, the executive all agree, even though they're probably they are the same party right now. Trusting them to get a lot done just feels wrong to me. So I think we're going to be okay.
What is one new aircraft type that you see as having the most impact on the used aircraft market?
Well, the newest segment, the very, very large ultra long-range airplanes are having an impact. Yeah, the other, that's kind of the newest entrant so we see that.
Yeah, I think I'd see the same thing, Don. It's, big growth there is international flying, longer flying, the demographic of people wanting to fly longer, the business growing, and I think that is something we'll see to continue to grow, maybe even disrupt over the not too long in the future.
I always look at what's selling the most, and that's the Phenom 300 and the Challenger 3500, I guess, and the PC-12. Those are the 3 aircraft that I look at if I want to understand this market. And a little bit, I mean, who knows at the top, maybe the G650ER, which seems to have this permanent demand. I look at those, and those are moving the markets, and those are commanding tremendous pricing right now.
Here's a cheery question. What could kill current momentum?
I think the thing we have to guard against is the customer experience. Chris Ellis was pretty eloquent about it yesterday. He used some examples. I'll use a different one. We have a 650 maybe going into a 12-year check, and they're quoting 3+ months to get it done. Well, today, if you go to a service center for 2 weeks, you're coming out in 3. If you go in for a month, you're coming out in 6 weeks. It's just sort of we think like that now. The idea that the newer airplanes need to be maintained more at the factory-owned service centers means that they spend more time there. When you think about 3+ months, could be 5 months, and you lose access to your airplane for that long, that's going to have a negative impact. So I think how we're treating our customers, we got to be very careful of. I don't want to lump everything into supply chain because that's just too simple now. But it's a, you know, we look at pre-buys. Pre-buys used to be a couple weeks, you know, 10 days to go look at an airplane. You got another 5-6 days of fixes, and off you go on a large cabin airplane. That's not the case now. This is, you're spending a quarter looking at and fixing an airplane, and that's hurting us.
Well, I think it's an exogenous threat that we have to watch for, and I don't know the probability, but I think it's Ukraine, what happens there and how we deal with Ukraine. If the U.S. pulls back support for Ukraine and the Europeans aren't ready to step it up, that could change the situation very quickly, right on the edge, on the eastern edge of our European market, which has been, oh, by the way, the fastest growing fleet in business aviation for the last 20 years.
That's a great stat. I would never have guessed that, actually.
Got to look at the data.
I feel kind of silly saying pre-buys. He's talking about Ukraine.
No one was thinking.
Pre-buy in Ukraine could be really tough to do, right?
Alan, no pressure.
No pressure. I think there's a third one. Obviously, you could say supply chain. Obviously, you could say geopolitical. From my personal viewpoint, really, I think technology is a huge part as well. Why do I think it could kill the current momentum? There's been a demographic change in what we're seeing as flyers. Like, it's a bit younger. The adoption of technology is something people have grown up with, and they expect it to be there, right? They expect ease of use. They expect simplicity. And I think that it's a race to get there, but if we're not mindful of it, it's something that could drive people away to an extent around not having ease of use. They'll just find a different solution.
What proportion of your customers book completely digitally?
It's in about the 30% range. So when you consider like 6,000 customers and a 30%, it's a lot. And they're demanding. And like, we love the innovation side of it. We want to stay ahead of it. So staying close to them and knowing what they want drives us to really stay ahead of it, because it's just going to continue to grow and grow and grow.
Okay, easy question to sum up. 2025 in one word, Don.
Oh, Bush.
Amazing.
Amazing, that's nice.
Bullish.
So I just want to say, I think this is the largest corporate jet investor ever. Is that true?
Miami, yeah.
Yeah, which I think is just unbelievable for Alan Louise. It's really cool. And I can't believe how many of you are still here today. Thank you so much.
And on that, thank you. I'd like to thank you. They're still here for your insights. So thank you very much. The cocktail reception is the other reason. You're not allowed to drink unless you're in the room for the last session. That's back out on the terrace, and then the Dealmakers dinner will be back here. Thanks so much, guys, and thank you to everyone.